The Warren Buffett Way. In a quiet office in Omaha, far from the noise of Wall Street, a man changed the way the world thought about investing. His name was Warren Buffett, the Oracle of Omaha, a student of Benjamin Graham, a master of patience, and the living proof that simplicity, discipline, and integrity can build an empire. Robert G. Hagstrom's The Warren Buffett Way unveiled not just how Buffett invested, but how he thought. Buffett's secret was not in complex formulas, but in a philosophy rooted in clarity. Buy a business, not a stock. He believed the stock market was a voting machine in the short term and a weighing machine in the long term. To him, price was what you paid. Value was what you got. While others traded in frenzy, chasing rumors and quarterly trends, Buffett looked for something rarer. A wonderful company at a fair price, not a fair company at a wonderful price. He studied each business as if he were buying the whole thing. Would I still want to own it? He would ask, if the market closed for 10 years. This question became his compass, guiding him through every storm and every bull run. Buffett's method was built on a few timeless pillars. First, business quality. He sought companies with strong brands, loyal customers, and products that would remain essential for decades. Coca-Cola, American Express, and GEICO, not just stocks, but stories of durability. He called it the moat, the invisible fortress that protects a business from competition. Second, management integrity. Buffett invested only with people he trusted. He once said, "When you combine ignorance and leverage, you get some pretty interesting results." To him, great leaders were not gamblers, but guardians of shareholder trust. Third, financial discipline. Buffett cared less about profits and more about return on equity, the efficiency of a company's capital. He avoided debt like poison. He saw leverage as a trap that could destroy in an instant what patience had built over decades. Buffett's approach required temperament, not genius. The stock market, he said, is designed to transfer money from the active to the patient. His power came from doing nothing, from waiting while others panicked. When markets fell, he smiled. Be fearful when others are greedy, and greedy when others are fearful. He never chased trends. He ignored forecasts. He read annual reports instead of news headlines. His library, not his trading floor, was the source of his fortune. Hagstrom revealed that Buffett's magic came from compounding, not just of money, but of wisdom. Every book he read, every mistake he studied, built upon the last. Time, for him, was the greatest investor of all. His wealth grew slowly, then suddenly. The mathematical miracle of exponential patience. Buffett also believed in simplicity. You don't have to be smarter than the rest, he said. You have to be more disciplined than the rest. He avoided what he didn't understand, focusing instead on clarity and calm. This humility became his greatest strength. And yet, the Warren Buffett Way was more than an investment guide. It was a philosophy of life. It taught that success is not measured by wealth alone, but by peace of mind, reputation, and time spent doing what one loves. Buffett called it his inner scorecard, the quiet satisfaction of knowing you've done the right thing, regardless of what the world thinks. Robert Hagstrom captured the essence of Buffett's journey, from a boy selling soda bottles door to door to one of the richest men alive. Not through luck, but through logic, patience, and heart. Buffett's greatest lesson was not how to make money, but how to think rationally, independently, and ethically. In a world obsessed with speed, Warren Buffett built his fortune on stillness. In a market ruled by emotion, he proved that the mind, when calm, can outperform the machine.